Good afternoon. It's CM Navarro 94. Check me out on IG. You feel me? Hey, check this out. Right here, I have a pair named Volatility 75. You go ahead and find this uh, synthetic indices under binary.com and go to platforms, trading view, and then you could search up your label just as you would do a normal pair. Um, I want to go over my trade analysis and why I'm hopping on this trade real quick. That way, it could be educational purposes for future people that want to learn from me. And on top of that, let's fuck around, make some money here. All right, check this out. To begin, we need to find something called market structure. Market structure happens to be the market and the way it structure, man. It's like a construction building. It has to be built in a certain way, or it could be used as ladders. Another example. When you go up some ladders and you're up there and you're done doing your business, guess what? Now you gotta come down those ladders. You have supply and demand, support and resistance, and we have trends. And the trends are your friends. But here's one thing about this: when you buy, you don't sell, and when you sell, you don't buy. That's wrong. When you see the market buying, you sell, and when you see the market selling, you buy. That right there is something that people don't know, people don't listen, people don't understand, and that's why motherfuckers still asking my DMs, how do you trade? But here's this dope video for y'all, and here it goes. Market structure, you have to verify on the higher time frame. I would do daily, but daily's too much of a run. So I'm gonna go ahead and just show you on the 4 hour time frame. 4 hour time frame, the 4 hour time frame is so simple because you're looking at, you don't want to go way too back, but you do also want to zoom out your chart and you want to see the overall picture. You want to see the bigger picture on your computer. You don't have to focus on every single candle. There's wicks involved. And if you focus too much on the wicks and the candles and you're close up, you're going to forget about the bigger picture. So you want to zoom out, zoom your screen out all the way and see where the market's coming from. Obviously we could literally see here the market if I just zoom out all the way and I draw a trend line. This is the only time you should be using a trend line. A trend line is like using a bicycle with training wheels. You don't need to put it accurate. You don't need to do none of that stuff. You just need to figure out that trend, where the market's going, and that's all that really you really got to figure out with the trend line. Trend line will draw you a fucking line from the highest point to the lowest point, or from the lowest point to the highest point. That's all. So I'm gonna remove that. Obviously, 4 hour time frame. We're on a bearish market. Means we're going down. I'm gonna go ahead and switch it over to the 1 hour market. 1 hour time frame. Here it comes as soon as it loads. So on the 1 hour time frame, I could see right off the bat on the left of my screen here, I have the highest point of the market. And from this highest point of the market, I have to start building structure. I have to kind of use my trend lines to give me the highest point to the lowest point. And that lowest point, I'm going to be marking it up. That lowest point here is going to be considered a lower low point right here, this yellow area. From there, we have a lower high point. We have a lower high, and we have, once again, from that lower high, we have a lower low. We have, once again, a pull, which is the lower high once again. From that pull, we have again a new lower low. From that lower low, we have again a lower high, because this obviously is lower than this lower high. So we have a lower high once again. And you keep on doing that, man. That's market structure. I don't know why, bro, but this volatility, it just fucking trends. It be trending. When it sells, it sells. When it buys, it buys. You just have to go with the flow. Bear with me, because that's what it is right now. Hey, we're going down. It's a bear market. So just bear with me real quick. We have lower low. This area here, we have a lower high. Once again, lower high. We still have a lower low right here. Once again, this area happens to be lower than this area, so that makes it valid. This area is a lower high once again. And this area is a lower high because this area is lower than this high. And here we go once again. We have the lowest point, which is down here. This is the low point. It makes it valid because it's lower than this previous one and this previous one. And now, this is where we end up at. In the overall picture, we see a strong bearish market, but we could start seeing loss of momentum. Loss of momentum happens to be that the market's getting exhausted. You know, the sellers are wearing out, and it's time for the buyers to kick in their money. So even though the market's selling, now the buyers are coming in. The buyers are coming in at every point of interest that I highlighted, which happens to be lower high, lower low, lower high, higher low. All those areas, in all reality, there's buyers involved with the big dogs. The big dogs, the big dogs, bro, the real motherfuckers in the Forex market making the money, that's where they're hopping in on buys. They're not selling, they're buying. They're just in drawdown. Because what happens is that once we start getting break of market structure, which happens to be, you guys seeing, you guys are standing by. I kept marking lower lows, lower highs, lower lows, lower highs, lower lows. Once you run out of those lower lows and lower highs, and once you start seeing the market break that structure, then you're going to start looking for that trend reversal. That trend reversal means that all the buyers are going out, and here comes the sellers to take their profits. The sellers happen to be those buyers because there's no way an investor could invest $1 trillion and make profit and then sell it. It's impossible. So that $1 trillion gets split in half. Maybe you're buying and you're selling. So you're buying and you're selling at the same time. That's a trader, and that's what it is, bro. I don't know why, but I've done it. And it feels good because you know that you could buy and you could sell and you could take money every time your account goes in drawdown by the move you just opened. Which is the other day I was in on a buy, and I seen a pull. I got in on a sell, and then by the time my drawdown came down from my buy, well, my sell had profit. I took my profit from my sell and I let my buy run, and my buy's been running for like 3 days now, and I've been making money ever since. I mean, and I'm looking to make money every time it sells. So here we go. We had a break of market structure by seeing this little pullback. This little pullback here, this little pullback was, I'm not gonna lie to you, it could have been a lower low right here. This could have been a lower low, but it wasn't really valid because there's really like, what was it, a couple pips away? Like, it really doesn't make it valid like that. That was what, like 70 pips. Now I don't consider that a market structure. I consider big dog moves to be market structure. From here to here, that's I prefer to see a bigger move like this than a smaller move. So we knew that something was going on around that area when that happened. So if we zoom in, we could see strong bullish momentum going on in this little area here I highlighted. You could literally see strong bullish candles coming in. That means that the buyers are starting to kick in. And what do you know? The sellers were strong. Sellers were strong. They kept selling and formed a new lower low market structure. But now, however, that area that we just went over, we need to highlight that area because it's a very important area. Something went down in that area. Something went down, which happens to be like a supply and a demand. I don't know. It's a point of interest where the traders were doing something. There's momentum. So we need to highlight that area because that momentum, that's where you're going to get the best entries ever. Now we go to this lower low point and see what happened. Yeah, we're on the 1 hour time frame and I'm not switching down to the lower time frame. I'm just standing by. That means that every single candle I've been standing by, waiting for me to see some things. Man, I've been living my life. I have a job. I've been doing whatever I got to do on the weekend. I haven't been stuck on the charts 24/7 now. Because I know in the beginning, you'll be stuck on the charts thinking you have to. But in all reality, you just have to wait for the move to happen and get in on the market when the traders are getting in. Why you gonna be that? Why you gonna be a nobody just hopping in on the market and there's nothing really going on? You're gonna lose for sure. So a couple hours went by, a couple days went by, and we hit this area. We hit this area of interest, and if we marked it up, if I was to mark it up as a lower high, then I could definitely see that by this purple line I drew here, that we started breaking market structure. Definitely, because now we have that lower low, and this new area is a new lower, is a new higher high now. This area here happens to be a higher high area, which is now the first sign of a trend reversal. We have a higher high. We broke this lower high. We retraced out of it. So now that makes it a lower high. And right now, the market just opened, even though there's volatility is 24/7, the market somehow, some way, there's some bullshit in these last few minutes where we opened up as a gap, and guess what that gap did? It created a new market structure, and it's affirmative. It's a confirmation that now we have a new higher high. So what am I looking to do? I'm looking for buys only. I'm only looking to buy this market, but I'm only looking to buy it at points of interest. My first point of interest is going to be this area of resistance. We have multiple confirmations that this area here is a resistance. This area right here is a resistance. We have this area as a support. Oh, and right before that, we also had another resistance going on right here. Try to make this. So now that we have this higher high, I can't get in on no trades. I really can't get in on no trades unless I sit on my hands, I go do whatever I gotta do. I come back in a few hours or two, and I check to see what happened with this market. I know for a fact that I have a higher high. Now I'm just waiting for the new lower high. But where would that new lower high be? That's when a Fibonacci could come in place. If you don't know what a Fibonacci is just a little retracement tool, nothing big, nothing special. All you want to do is kind of get your lower high point, your higher high point. You want to kind of give yourself a 38, anywhere between the 38.2 and 50, which is called the golden zone for some people. I don't know, but all it is basically is going to tell you how far of a percentage is this market going to retrace? Is it going to retrace halfway? They're going to retrace all the way. If it retraces all the way, I can't trade. We're in a range. And we can't trade in the range. But it's obvious we have strong buyers. So we need to wait for this market to come back minimum to that 38.2 level to hop in on the entry. And you're just going to have to thug it out with your stop loss. Or if you want to be more safe, you want to go ahead and just shoot for a 50%. Or, man, if you're really patient and you see this market go to the 618 level, hey, man, that's going to be your time to shine. That's going to be probably the last call of this train before you hop in, man, before it takes off. But I know for a fact that the way I marked up these purple lines, that's how the market's headed. I'm just not trading the scalping way. I'm not gambling. I'm looking for high probability setups, and I'm looking for high quality trades. Fuck everything else. I'm tired of losing. I'm tired of losing. I'm ready to get some money, but in order for me to get some money is like going to work. I have to go put in 8 hours of the day, 5 times a week, and then I have to do another week, wait, work, and then that following week I'll get my paycheck. If you seen it the way you do it at your job, you'll probably become successful in Forex too. I'm just learning how to step out of that zone. I'm gonna go ahead and cut this video here. I'm looking for a pullback to a point of interest before I start buying. But right now, if I really wanted to, I could start selling. I could start selling, and my stop loss would just be above that higher high. And my first take profit will be just a 1-to-1. Even if I hop on a sell and this sell plays out and it does not take me off the market, it's obvious this trade that I'll place as a sell. Look at it. It's a 1-to-1, and look where the first target happens to be at. It happens to be in that yellow demand, yellow demand or supplies or whatever you want to call it, a little support and resistance. That's probably where I'll go ahead and take profit, and I'm gonna just leave it like that because this next video that I'm about to pull out, this shit's gonna be fire, and it's gonna determine if I know what the fuck I'm talking about. Yeah, you feel me? I'm gonna go ahead and stop sharing, stop the recording. With that being said, go ahead and follow my Instagram, CM Navarro94, and this new fucking YouTube page. We better start having these fucking dope videos out on, man. Let's get some money together.